The team over at Alibaba Cloud recently unveiled their strategic roadmap to becoming a global cloud providing powerhouse. And that's what I'm going to cover in this video, but first, let me run that intro. What's up, guys, and welcome back to the channel. And this is very exciting because I've been waiting for more news on the development of the Alibaba Cloud business globally. And so we finally have some indications of what they're doing, and I presume that we're going to get even more information in December when they have their Alibaba Investor Day like they did last year. And you guys know that I will cover every day in detail. And last year was like a 10-part video series, and I do expect the same this year. But let's dive right into this one. You can see here that Alibaba unveiled their strategic roadmap for the international business, and they did this at the Alibaba 2022 Cloud Summit. And this is what I think is the most important part of this outline. They're saying that they created a new cloud enterprise network. They call it their 2.0, which essentially supports ultra large scale networking capabilities with higher availability, lower latency, and enhanced security. But I think the most important point is greater flexibility in pricing options for enterprises. Look, you got companies coming on to using cloud service providers for the first time. A lot of these companies are generally internet-based companies. Internet-based companies' largest expenditure item as a percentage of revenue is normally cloud-based expenditures, and they pay for two things. The first thing is computing power, and the second thing is housing the data, so like hard drive space. And so you want to be able to provide both of those very effectively and do it in a way that they can really a la carte what they want, so they're not overpaying for computing power and they're not overpaying for storage, or at least even tier it up in a way so that they're never really feeling like they're overpaying, especially in an environment right now where they may be on the fence of whether or not they want to use a cloud-based provider. And so this is very important, and I do believe that Amazon, Microsoft, and Google are going to some of their customers with an eraser to try and figure out a better pricing scheme for them in this environment of cost cutting. And this is another really good piece of information, because what Alibaba Cloud is doing is they're committing to a $1 billion investment effectively in a way to get the customers to sign up and go to market with their cloud solution. And so that's effectively what they're calling the Regional Accelerator program. And so I really like that they're focusing on their customers' needs and success by investing in them to ensure that they're successful. And this section really speaks to how they're diversifying outside of China, and so they really are becoming a global powerhouse. So they launched a global delivery and service program, and that's really helping clients get onboarded with adopting the cloud processes. And so they have opened 3 service centers in Malaysia, Portugal, and Mexico. And then in addition to that, they have customer service centers, which they have in Malaysia, the UAE, and of course China. And what this investment is really saying is that they are committed to growing globally, and hopefully this pays dividends as they bring on more and more clients in a geographically diversified manner. So essentially just clients outside of China. And you can see that they're doing that already, as they showed you that they just signed up a company in Japan, so JP Games. They have Metaverse XR in Thailand. They have UMG Group in Myanmar. They have Be Live and Vision Tech in Singapore, and they have On Finality in New Zealand. And so more to come, I do believe. And this is from their Alibaba Investor Day presentation that I mentioned earlier. This is where they were talking about the cloud business. So notice that the Chinese cloud market is expected to grow at least at the time of the presentation around 37% a year CAGR. Now, I do believe that that could potentially decline a little bit, but my forecast for Alibaba's cloud business is expecting to only grow at an annualized rate of 15%. So that's less than half of where they thought that this market is going to go as of last year, December. And notice that that 15% is even lower than the rate at which the US cloud market is growing or expected to grow into 2025. And so we'll see what growth rate figures they provide to us in their Investor Day presentation this year in December. And notice from here, they're kind of letting you know exactly what is growing in the cloud space. It's largely IT services and software, which is growing at a CAGR rate of 18%. And notice what's sort of leading this growth. The first is digitalization. The second second is Internet of Things businesses, and the third is artificial intelligence. And so you're seeing a lot of that type of growth driving adoption to cloud. And you can see that Alibaba Cloud is very future focused. So moving forward from Cloud 2.0, where you had e-commerce, social media, and video streaming, those industries are largely mature. And now you're moving into the third version of the internet, which is the metaverse, the industrial artificial intelligence Internet of Things, and autonomous vehicles. So they're very future focused, and they're ready for this new generation of internet companies and products to be moved into the cloud space. But what exactly does this mean for their growth? Well, you can see that cloud has been growing very quickly. So, 85% in 2019, 63% in 2020, 23% in 2022, which was supposed to be a rough year. And so the cloud business continues to accelerate onwards despite weakness in the overall Chinese economy. And you can see that I'm expecting only 10% growth year over year in fiscal year 2023, and then thereafter I'm only expecting 15% year over year growth. So I'm being very pessimistic for the cloud business. I do believe that it ends up growing faster, but I don't think I need to value it in, because I'm proving a point with my valuation that even with cloud only growing at 15%, the company overall is still valued at a third of its intrinsic value. And what do I mean by that? Well, you can see here that using a 20 times terminal multiple, I'm valuing Alibaba at approximately $260 per share, which reflects 30% of the current share price. Now, the one thing that I do want you to pay attention to is that excess cash amount of $29.36. Because we're using a free cash flow per share valuation methodology, that means that we can actually add in the investment in equity method investees that sits on the balance sheet. So notice that there's a big fat zero there. And so you can actually add that into their excess capital. And so their excess capital per share could increase to $40 per share if you really wanted to. But like I said, based on where the valuation is right now, you really don't need to do that. Now, how do you get access to that Alibaba model? Well, you can get access to that Alibaba model at the lower tier of our Patreons. And if you want to join us for an epic live presentation every month, you can join us at that higher tier. Now, guys, I recently just put out a video on Apple and whether I think it's a value opportunity now as it's fallen approximately 20% year to date. And you can actually get access to that video right here.